Hi, this is Tracie Schmidt with NEXA Mortgage, and I have on the call today Patti and Andrew. How are you guys?
Good. How are you? We're
Okay.
excited to be here.
Take a second to introduce yourselves before we talk about down payment assistance, which I know everybody is wondering about. So just take a moment.
Okay, I'll go. Patti Gregory, leader of the Haven Realty Group. We work all over Southern California, and we're working today with Tracie just to bring more value and more loan products to our clients, saving some money.
Love
Go
it.
ahead, Andrew.
Andrew Emmer. I'm on the same team as Patti with Haven Realty Group, and just excited to be here and continue to learn. I'm newer in the real estate world, and so every chance I get, I take these learning opportunities. So thanks for being here, and thanks for
I
having
love
us.
it. Yeah, I mean, down payment assistance is something that we hear about all of the time. And I think, there's so many nuances with it. And so I don't want to like overwhelm people with guidelines, but just to give the message that it is available. And, there is down, especially in California where we are, there's a bunch of different options. And so I wanted to take a minute and talk about a program called, it's called an empowered DPA program. And it's something that one of the lenders that we work with has. And I'm going to do just a quick share screen so I can bullet point some of the features of this program. And I don't know, are you able to see that Word document at all? Okay.
Yes.
Is it in a decent amount of print or?
For most people, I'm old, so
Okay.
I'll
So
just
I'm gonna actually step it up and I'll make it a little bit
okay.
bigger here.
And this is so cool because during COVID, we didn't even have time to do this. So
Yeah.
that just knocked all this whole option out. So I'm really excited that this
Yeah.
is
Well, so the thing is
I
with
can read it now.
Yeah, good. With these particular programs, now the good thing is that we fund the first mortgage, and that first mortgage could fund as quickly as any other type of loan. And the down payment assistance actually closes along with it. So the programs I'm talking about aren't programs that we have to send out to someone or could take 60 days or 90 days.
Oh,
to
that's
close.
excellent.
They're as quick, yeah. So the empowered DPA, and I'm going to put my screen over here. So I'm actually like looking at you. So I'm going to stop share and then share right here. Here we go. Okay. That's better. You can see that,
Yes.
right? Okay. So basically you only have to qualify under one of these categories. You do not have to meet all of them. So if you're a first time home buyer, meaning that you haven't owned a home in at least the last 3 years, you could qualify for this program. Okay. If you are not a first-time home buyer, but you're a current, retired, or volunteer or non-paid first responder, daycare, teacher, nurse, doctor, civil servant, federal, state, or local, you could qualify for this DPA program. Okay. And when I say DPA, it stands for down payment assistance. If neither of those are true, you also could qualify if you meet certain income limits, which is a little bit more difficult. And we have to look it up per state and per county of what those limits are. And if you don't meet any of those three, we then have to see if you're within an undeserved census tract. So that's something that we have to look up. Generally, you're going to be first or second category or third category. But again, we could do undeserved census tract as well.
Okay.
So what happens is the first mortgage is an FHA loan. The down payment assistance that you could choose to get as a buyer is 2% or 3.5% of the sales price. So Patti, on FHA loans, what's the minimum down payment requirement? Do you know?
3.5.
Okay. So most people will choose the 3.5% because that's actually going to help them cover that down payment requirement. Okay. Your debt to income ratio guideline. So on FHA, one of the advantages of this loan type is sometimes it allows you to go over 50% debt ratio, 52%, 55%. But this program specifically will tighten up those guidelines a little bit, and you have to be just below 49% for your debt to income ratio. Okay. Next, max loan amount. So we have to stay within the conforming loan limits, which actually increased this year for our counties, which is great. So the maximum loan amount would be $726,200, which means if we do assume a 3.5% down payment, this is the sales price that someone would be looking at, would be that 753 as that maximum mark. Okay. It can't be.
Yeah, I might have somebody in mind for this that was actually going to use a VA, but I think this is going to be a better option for them.
So it depends. And I could go through, well, actually, let's go through
Okay.
that now of why. So the difference with VA and this down payment assistance is FHA loans will have monthly mortgage insurance where VA loans won't.
That's true.
Okay. VA loans don't require a down payment. This FHA loan does, even though it's going to get covered. And VA pricing right now, especially with the market getting better with interest rates, generally we could build in a credit close to assistance at an interest rate, and they don't have to pay the mortgage insurance, but they still get a credit towards that down payment or closing costs.
Got it.
So we would weigh both side by side and have them see which one would benefit them the most.
Okay.
Okay, so this particular loan, you can't combine it with any other down payment assistance programs. But what you always want to try to do as a real estate agent is help your client get as much of a seller concession as possible, because there's cost involved as well to get these type of loans. So you want to get as much credit as possible. So not only can you cover the down payment, but also cover the closing costs that are involved as well.
Okay.
Okay. So basically the borrower would need to take a home ownership course. It's one approved by HUD, and we give them a website that they can look at. They pre-purchase it for $100, but then when the loan closes, they'll see that as a credit on their settlement statement from us. So they're getting reimbursed for that. Okay. You're actually allowed to have a non-occupant co-borrower. So if
Really?
Yes. So only one person on the loan needs to meet one of those categories that we talked about. So if you can't qualify though for income, you can have someone that won't live in the property go on that loan with you to help you qualify.
That's excellent.
And so with this, and this is still what the current rates are, but you'll notice they're going to be a little bit higher than market because you're getting that credit. But at a 3.5% credit, you're looking at about 7.75%, right? Current market right now is probably about 1% lower. And then a 2% credit was at about 7.25%. So what we try to say with these type of loans is it's not your forever loan, right? It's your opportunity to get into a home.
Absolutely.
When you don't have money, to be able to gain appreciation, gain equity, save additional money, and then refinance hopefully out of that, so you could get into a more traditional type of product and get rid of that mortgage insurance.
And this is exactly what it's built for, the first-time buyers. Let's help them get started.
Absolutely. And it's giving people that have given back to us, credits, which they deserve, the first responders,
Absolutely.
The teachers, the doctors. So what I'll always...
So they have to volunteer or be paid. They can't be active.
Yeah, they can. They can be active.
Oh,
they
okay.
Be paid. They could be volunteer. They could be retired. They could be anything. If we
all of them
document. Yep. So if someone was a teacher and they're retired, they could still look to potentially get this program. Absolutely.
Oh, teacher too. Okay.
Yeah. Teachers, first responders, nurses, doctors.
I had a teacher reach out the other night. I'm going to send some
firefighters. Yeah. So that's one type of program. The other is down payment assistance, where you can get up to 5% in credit, or you could get 3.5% in a credit. So basically what we want to see is how much money does a potential buyer have? Because if you do have some money saved, it's going to benefit you to use that, right? And try to get into the best program possible. But if you need assistance, how much do you need? The more assistance you get, the higher the interest rate is. The more assistance you need, the lower the interest rate. So we try to gauge it with what people want. But on one of the other down payment assistance programs, you only need a minimum of a 600 credit score.
That's pretty low. Which
is great. Yeah. So, and basically it would be the same thing. We would follow in San Diego County, for example. And I could look up, actually, let me look up your county specifically while we're on the phone here. So the way that this down payment assistance program works is we actually have to be within a certain percentage of AMI, which is the area median income, right? And what county are you in again?
Orange.
Orange. Okay.
Orange County. Yeah.
So let me show you really quick what I'm doing here.
So average medium income.
Yeah, so you could go up to 160% of what the average medium income is. And so I'm going to go ahead and just in our chat here, so we can see it. Let's see here. Let me minimize. I have so many boxes open that I have to.
Oh, me too.
Zoom chat box. Like, where did that go? View. Do you see the chat box? Oh, here it is. Okay, I have to make this smaller. Okay, so hold on, let me get it.
I see it.
Okay, here's the chat. So I'm going to put this link in here. So this is actually where I'm going to go to check what the medium income is. And so let me go ahead and share my screen really quick.
How often does that change?
It changes per year. So
Okay,
yeah,
annually.
so you'll see right here, if you could see my screen.
Yes.
So I put in California, so this is 2022. So 2023 will be out soon. So we'll just check for that. So if you go to California and then I go to Orange County right here, and then I'm going to view county calculations. So right here, the median family income is $119,100. And this particular program allows you to go up to 160% of that. So as long as the total household,
That's 190.
yeah, exactly. So 160% of that is 190,560. So as long as all members in the household above 18 that are working earn a total of less than that, that's something where they could look to apply for the assistance.
Well, that's very good.
Yeah, and so they get there's, you know, and I'm going to just read some of the notes here because there's so many about the program, but the debt to income ratio on this particular program is determined by automated underwriting. So it doesn't have to necessarily be that 48.99%. So
Okay.
the key to this is there's options.
Exactly. Right? Exactly. And just exploring those, if somebody says, oh, I don't have down payment, let's look at your options.
Exactly. Yeah. And honestly, like too, I just try to tell people, you know, if you don't meet the credit score requirement, we have ways to run simulators to see what you need to do to get to the credit score. If you can't get all of the closing costs covered with a concession, but you need $5,000, well, let's divide that over by how much you think you can save weekly or monthly and put a plan together, right? So there's information that we could provide to people when they think they can't buy that most likely they can, which is good.
Oh, I love it. This is exciting. And this is the time to be doing this. We're in that perfect market right now. Absolutely.
Yeah. And I always tell people, I mean, there's so many nuances to each program that, you know, going online and searching down payment assistance, it's helpful in a way, but you want to
way too big.
You want to talk to a licensed mortgage professional that has been doing it for a long time. And, you know, I have access to, I mean, I already named probably two or three other down payment assistance programs, because with NEXA, we work with so many different lenders that I can access all of these different things versus just one program.
That's really exciting. I know. I always tell people check rates online. That's about it. The rest.
I hate when they check rates online because it's so fake. It's like fake news.
I know. And the whole time I'm watching football, Rocket Mortgage, I'm like, boo, Rocket Mortgage.
I know. Yeah, it's really tough. I mean, when you're looking at online companies, they are lead-based loan officers. So they get paid very little and they have a high volume of customers. And so, you know, when you're doing a purchase loan and you have to meet contingency dates and timelines and your money's on the line, you're going to want to work with someone. Like for me, for example, I don't do 40 loans a month, right? I do 6 to 7 loans a month that are referred. I don't buy leads. So, you know, so you kind of are treated a little bit differently. Again, not everybody's going to go, you know, with a mortgage lender like myself, but just to know your options that are out there, because I'm not sure how educated other loan officers that haven't been in the business for a long amount of time are in assistance that you could get. So
right, absolutely.
And there's some too that you want to know, like there's repayable assistance, which you're always going to get a better interest rate on if you pay it back, or if you're like, nope, I don't want to repay anything back, I want it to be forgiven. Then again, your interest rate will vary. So we'll give you those options when it's time.
This is great, Tracie. Yeah. This is really a lot of information.
Good. A lot of good stuff. Yeah, I don't want to overwhelm you guys, but I thought if we could just talk about one specific topic today and we can get that out there to people, it might be helpful.
No, that's great. And we'll be rolling it out as well.
What's the best way, Patti, for them to get in touch with you and Andrew if they have questions?
Google me. I'm everywhere. Patti Gregory Realtor.
You're everywhere?
Yeah, same. Google Andrew Emmer Realtor.
Love it. Yeah, me too. I mean, I think it's so important because you could see us online. You could see our reviews, our testimonials, you know, all of that stuff. It's out there for the masses to check out. We can't hide. in this.
No, there's no hiding at this point.
Awesome. Well, it's so great to talk to you guys. And just let me know what other products you have questions on, and we'll do another call next week.
Awesome. Sounds good, Tracie.
Okay,
Thank you so
perfect.
much.
Thanks, guys.